Hello guys, today I think I come on time. I think there is a mistake. It says 3 hours. No, I just begin. Okay. So hope you are doing well. Now, I think this live, there is something wrong. It says here 3 hours elapsed. I don't know why it says this, but no problem. So, hi everyone. Hi free trader. I think you are the first to come. Although it says watching 0, I don't know where you are hiding, but when I see the board, it says watching 0, and you are speaking to me. I don't know. This live today will be weird and crazy. So, for today, we try to see a big subject, as always, how to deal with IPO opportunities. A lot of times, when I come to IPOs, I find some big deals. Yes, free trader, you say everything looks good. Yes, everything looks good for me also. Hi, clown with Twitter account. But the problem is that I see the chat. It says 3 hours elapsed time. We just begin. I don't know how this we have done 3 hours. I don't know what's going on with this YouTube live. So clown with Twitter account says IPOs are dead in current market. No, who tells you this? Now IPOs is like nuggets of gold, okay, into a gold mine. You should search and should continue searching until you find a bargain. It is not just you go to IPOs and you buy whatever stock and then you make money and then you go sleep. Now, this is not gonna to work like this. As the other stocks, it's not. And you say, why companies need to provide the guidance? Which guidance? So please. Oh yeah. Oh, you say I don't buy in the current market. Yes. We are not speaking about selling short or going long. Okay, I'm not speaking about that. I'm speaking about the general thing about IPOs. Yes, the current market is too bad. But still, smaller stocks have a chance to make money from, not like medium or bigger stocks. The reason for that is, in general, smaller stocks. Now, when I say smaller, it doesn't mean that it will be $1, $2, or 50 cents. No, it could be $10, $15, $20. Smaller stocks, it's like when we have what we call a gap up or gap down. It's the news. Sometimes when a company is very famous, sometimes when it enters to the stock market, it gets listed, there is excitement and there is a bubble to this stock. Okay? Like 2 months ago, someone gave me, I didn't see it because I don't search that much. Someone gave me a stock. If you see it, you don't believe it. From $25, it goes to $300 in 2 weeks or 3 weeks. Okay? So there are opportunities. When you say there is no, so it's not. But I am... No, I'm not saying... listen, the clown. My live session is not about I ask you to buy. I don't ask you to buy. What is this question that you are asking? I'm not asking you to buy or to sell short. Okay? If the IPO is going down, yes, you short it. It's better because most of the IPOs go down. This is a very good thing. If you know how to short, you can do it daily without needing to see IPOs or not IPOs. But I'm telling you that some companies are doing so well. Okay? Just in the few days. Okay? 2 weeks, 3 weeks, 5 weeks. And it is not all of them. Most of them, they go down. It's just because, as you told me, they are expensive. Sometimes they are expensive. Okay, I see one which is expensive, but it's going up. Although it's 40, 50, 70, and it's still going up. So this is just because of the news. Okay, the news created something that doesn't exist without the news. Okay, without the news, you see that this just a normal stock, 10 years or 20 years stock, it's moving, but since there is no news, there is no something that it is bubbling in this stock, so you see that stock is trading normally. But this IPO that I'm speaking about, what we call hot IPO, I don't want to use this hot and cold. No. Because no one is telling you hot, it means it's go up, cold, it go down. No. Okay? So when they see it's going up for long and it's over, they say, oh, this is hot. No, I'm not speaking about that. Okay? I'm speaking about something just in general about IPOs. I'm not speaking about now or in the future or in the past. Okay? So, because each week, each month, we have IPOs that go and get listed. Either we are in a bad market, or in a correction, or we are in a downtrend, or we are in a bull market. It doesn't matter. Because these companies, they set a time and they begin the process. For them, for the company, it doesn't matter. Because for the company, it gets too much money for nothing. Understand what is an IPO. An IPO is to take your money and all investors' money. It means according to the percentage they do. Because a company doesn't sell all its shares. Let's say a company, just an example, it leaves, for example, 50% or 45% of all the shares for the company itself and the big investors in it. Okay? Those that they constitute the company, they don't sell because it is the company itself. Okay? They don't sell whatever happens because those guys are with the company. It means it's like the owners of the company. They don't sell. Okay? But other people like mutual funds or the other, they can sell. At a certain time they can sell. But those, they don't sell because it is their company. If they sell their company and they give it to others, it can collapse. Okay? Because of the direction, because of the thing. Okay? Yes. As Clown said, hot means popular. People love it. Had good future. No, listen. When the people say hot, it's over. Okay? Because the news, when you see the news in the market, most of the action of the price has been done. Let me, Clown, let me drink some water, some coffee before I continue. Clown said, guidance means predicting the future earnings when they release earnings. No, listen to me. We try not to predict that much. Understand that analysts, they speak only with certain stocks in the market. Okay? Because they get paid for that. There are a lot of companies that that the analysts, they don't speak about them. Okay? Because they don't get paid from these companies or others. So there is no interest in speaking about them. That's why in the market, when you look at the market, the whole year they are speaking about few stocks, few companies in America. But the other companies that they get listed, they don't speak that much. And they don't have assigned analysts. But big companies, most of them, they have assigned analysts. They speak too much about them. They know a lot about what the company is doing. They can do the estimate of the earnings. This is what we are speaking about. Okay? Yes, give an estimate. It is for the EPS. Most of the companies, they don't at the beginning. Okay? It's later when the company stabilized and they begin to show its money, because the IPO, when it goes, there is no there is no earnings, there is nothing. The company, the people, they just try to think about if it is a good thing to buy, yes or no. But some or few IPOs succeed to get this attention. When they get this attention and it is moving very fast, okay? When it is moving too fast, and later when the people begin to speak about it in TV and in common news. But most of the time it's crazy. It's like a bubble, and some people, they buy until it gets saturated. I have seen like 2 weeks or 3 weeks ago, one of you guys has given me a stock that goes from $25 to $300. Just a few days. It was crazy how this company goes to 300 in 3 days. This is what I am talking about. Not just 300, but it can be doubled. Like, let's say $20, it goes to $10, it goes to $20 or $30 in 1 week, 2 weeks, 3 weeks. This is what I am talking about. I'm not talking to invest in a company and to stay 2 years or 3 years. Okay? But in general, what will happen, companies that they don't have what we call large analysts, they don't assign analysts, and the company is a small, no one know it, they forget about it. If they give the name, it's too much when they give the name on the news. Okay? But understand that those guys who are in the market, okay, those guys who own the company and the shareholders, it's a big day because it succeeded. Because understand that it's not every stock, every company that go listed. There are some that they apply, they wait, and then something fall apart and they don't get listed. You know, when they get listed, it's the big jackpot for the company. A company with 100 million, it becomes with 10 billion or 20 billion or 30 billion. So it is too much money that get to this company. Now this company make more stores, make more research, it pay their workers more, and the progress begin with this company. Even if the price of the stock goes down, it doesn't mean that this company will not make money for the earnings. Okay? But understand that the market is about views. It's about opinions. Okay? When I say, for example, this company is good and I buy it, and you said no, it's not, we don't know who wins until after 1 year or 2 or 3 we see the results. And the results is about what the people do. And you know that the people are manipulated. Okay? The people are manipulated. They can create a bubble about a company and they push these stocks wherever who pushes this stock up. I have seen stock that we don't have people who are buying, and you see the stock is going up for long. So I get astonished because those companies with fewer volume or little volume, anyone can push the stock up and up and up and up. Okay? So, searching for these IPOs, it doesn't take time, but it takes to follow. Okay? To follow these companies whenever they are ready to go, and it will be, sometimes it will be a good bargain. Because I have seen some stocks, in few days they double. It could be $5, they go to $10, $20 it goes 40, or 40 it goes to 80 in few days. This is because of the push. There are some people who are pushing. For us, it doesn't mean who is pushing or why he is pushing the stock. We don't care. What we care is always the price. Now, for you, clown with Twitter account, and all the people, we understand that a company is going down, IPO or not an IPO, each day it is a way to short sell this stock and to make money. We don't speak about that because it's normal. Although people I get scared, they are always scared about shorting, okay? Because it is something they don't understand, and I am good with these people. You should not do something that you don't understand, especially selling short. And most of the time, you should never hold a stock when you sell short. Never, because any news can change your profits into a big loss. You can even lose all your money. And some people who are doing smaller stocks are the most affected because they can wipe out their account and they get some problems. Hello, Wiseman. Wiseman, where have you been? I haven't seen you for 1 week or two. You are preparing for the chicken, I know, or turkey for the Thanksgiving. That's why I don't see you here. Do you have a farm, Wiseman? Do you have a farm, or you live in a farm? Because I see you these 2 or 3 weeks. You are fattening the turkeys, I guess. So, for me, this is something I do for a long time. I follow the stocks. I don't want to know what is their stocks or what they do or whatever. But mostly, I am interested in the stocks that can make a big deal. Most of these stocks, most of them, not all, most of them, are drug stocks. Drug stocks are very, very active companies. They are doing research, and sometimes good news, it can double or triple the stock price, whatever is this price. Okay? One time I was with a 75 stock, and I don't know, maybe they get approved or something. Next day I found 135. So it's a big deal. I have never thought that this stock will go to 135 in one night. It's just because they get approved or whatever. So sometimes news always change the price for good. But understand that not every IPO will do good. Most of the IPOs I see, almost all of them, they go for 1 year, 2 years, 3 years, and then they come back. Now, what is the reason for that? As my experience, for me, is that a lot of investors, hedge funds, they are looking for these stocks and assign someone to look into the earnings, to look into these companies, what they are doing. Are they really good companies? It means they are making a lot of money. Okay, are they doing a lot of money? And uh, and later, after 6 months, 1 year, 2 years, they begin to see if these companies are making money and the earnings are better and better and better. Okay, it's very easy to follow this stuff. Now, when they see this company is good, so what do? They begin to buy when the stock is too cheap, because all the people, they don't want it. It's going down and no one buys. So they buy from the bottom when the stock is, no one is looking for it, and then the stock will begin to go up so good. Now, after 1 year, 2 years, or 3 years, or 5 years, sometimes 5 years, you see that these stocks have a very downtrend, and then we have an uptrend, and then you will see the success. When you see the success is when the trend is apparent. All the people see it. Now, some people, they buy, some people, they are hesitant, and some people, they don't have money to keep for many years, because understand that some people, when they invest in a stock, and about that, okay? So let's see, Clown, what did he say? He said, E-Trade are crooks. I short today when I press cover. I found that I am shorting more shares, another 100. Happened to me twice. If happened again, I'm gonna move to another broker, or Brooks. He say Brooks. I keep my mount. Oh, you have a problem with the software. It means when you are like shorting the stock. Sometimes, listen, Clown who cheater account. Whenever you do an action, because I use them, I use E-Trade. Whenever you click, let's say on sell with 100, okay, it gives you an ID for that order. Now, how come you get another order after this order? So try to check the time, okay? And if you are sure about something, you can speak to a representative. If his answers is not good for you, try always to make copies, okay? Try to make a screenshot always when we have a problem. Don't change or do something and they call them. Try to make copies first in order to have the proof. Okay? Hello, Nastunanachi. Bonsoir, Monsieur Nastunanachi. Okay? So, Clown Twitter account, when you do an order, it should be in your history. You should see it. And then if you made another, you sell another time, okay? It is another order, except when you do 200 shares, okay? And always try to take a screenshot, okay? Try to take a screenshot and see. Because sometimes we do mistakes, but we don't know that we have done mistakes. Okay, that's a good thing. And always take screenshot, see what's going on, try to see the history, ask them to give you the orders by time, and when did you click the second time, and maybe you have done it and you don't know. Maybe you want to cover back and you sell again. Okay, when you sell again, 100 100 shares pop up again. Okay. Hello, Duna. How are you? Duna said, let's continue. Let's now listen. Let me finish with you, clown with Twitter, and then I can go to someone else. Clown with Twitter account. You have the time. Go to the history and see what you did today. Because it will show you the ID, it will show you whatever you do, it will show you. This is a software. This is not a person who changes your numbers just because someone is after you. No. E-Trade is a big broker. It has hundreds of thousands of subscribers. Okay? So no one is after you. But if the system has done a mistake, you can spot it, which is very good. Okay? And I know E-Trade, they have problems in showing numbers. I always complain about their numbers, and then how do they show their numbers. Okay, so this is true sometimes, and you should just call them when you see something wrong. For everyone of you guys, first, when you see something wrong, you make a screenshot. This is the first thing you do. Okay, your account, you make the whole page, you make a screenshot, and then follow what you did in history and see the outcome. Okay? And then, if you are sure, you can call the customer service. Now, if you find that the guy who is answering you, his answers is not satisfactory, you can ask for a manager. You say, no, I will not speak to you anymore. Give me a manager. He will, when you insist, he will bring you a manager, and he will talk to you, and you ask him to verify one by one, and until you finish your problem. Don't leave it for tomorrow, because tomorrow it will be another thing. Okay? Maybe there is a real thing in the software, because these are all numbers, and whatever you do should be showing in your dashboard. But history is very good, and you can see all of that. Okay, let's go to a free trader. He says IPO can be a good opportunity, however it is risky to jump right away into it. Yes, I understand the free trader. Whenever you buy something, there is a risk, but sometimes these IPOs, there are just a few, not all of them. When they go for good. It means just few days. It means it's not you stay 1 month, 2 months, 6 months. No, these sometimes just because of the bubble of the new company. Maybe this company is known and a lot of people are waiting for it, but we as a trader, we don't know because we don't follow. There are a lot of companies that we don't know they are so important in the market. They are private. People, they know it, and we don't. Okay? For me, for example, I know about Square, the company about Square. I know it before it was public, and I see it the first days, but I didn't see after 6 months of months, and it goes from $5, it goes to $99, so it's over. Okay, so I didn't see that time. So that's why I told you you should always follow, and each week we have new IPOs. You should follow this as something that you do as a part-time and you follow. And you should have some money to try. I understand there is a risk, yes, always. Clown with Twitter account say, I don't want to complain because I know the outcome. What is the outcome that you know? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done this, you should see it in the history. Okay? If you have done Okay? You should see it if you have done it by yourself, because I don't think that software double your trade. Maybe you buy you sell short and you get mistaken when you want to buy back. You click on sell again. Okay? So when you click on sell again, you will add $100, 100 shares again. So maybe it is your fault. So just to try to see the history for today. Try just to see it. Okay? And you can get the answer from the history. Now, if you are sure, you should call them. Okay? If you are sure, you call them and you try just to understand what's going on. Okay? So don't forget about these things, because these things and you say, or I will change the broker. Okay, if you don't like the broker, why you are still here? Okay? Don't change the broker right now, because if you have another broker, you will have to file 2 brokers at the same time, which is not good. You can just wait. We have only 1 month and a half. You can begin with your broker, the new broker, at the 1st January. At least you will begin with that, with those guys. Okay? 1st of January. You can begin with another one, and then at the end of December, you can take all your money from this, if you are sure and if you have traded with them a long time ago. But for me, don't do anything until you see what's the problem. Okay? Okay, Nasty Nochi, bonsoir. Duna, hi teacher, how are you? Duna, I made some mistakes and it cost me. Mistakes always we do, and we should just be responsible for our mistakes and not to do them again. I don't know what you did today, but Free Trader said, had some losses but got back on track today. It's very good. I lost $78. It's not a big deal, $78. Just think you have gone to a restaurant with someone and you ate good food. $78 is not a big deal, okay? It's not a big loss. I thought you say 1,000 or 2,000 and say yes. If you are doing day trading and you lose 1,000, 2,000, it means you have done big mistakes. But if it is just okay, so always okay, hey, Mason put try to stop playing, because here, listen, all the guys here, most of them are my students, and some people are coming here to get some knowledge. So if you are going here to play, I will just delete your stuff, and then I will delete you if you continue like this, Mason. So take this time to ask questions if you want. Now Duna is playing, and I just say him some word. I just warn him. If he continue to play, I will take him out from this chat, because I don't want someone to come here instead of asking questions or giving us information. He will be playing like this. Okay. Now, I don't tolerate this kind of conversation. Okay, so people here are serious, and we are doing. Hey, hobby Bonseigneur is like the same for you. Try to concentrate on what we are saying. If you have questions, you should ask about trading or whatever. But stop following, taking this chat out of its thing. Okay, so I've just removed this, and then I will see if these two people continue to play. Now, what's the direction for the market? It's Duna. Oh, okay, Hobby Bosnier, listen. We are here. We have only 1 hour or two. We are just speaking about trading or options or investing or IPOs. So our time is very, very important to us. And those guys, they come here to get some information. They can go somewhere else to have fun, but they come here and they want to stay with us here. So think about it. Hey, Duna, it is you who should tell me about the market, since you have the ETFs. Okay, you have the ETFs, so you know everything. So you should tell me about this. So Duna, I will just show you the major indexes. And Duna, if you want to discuss your ETFs that you are in, you can send me an email. As you know, we do things private when it is like something for private things. So you say it is unclear right now. So I will just give you a snapshot, okay, about the market. So let's go to the chart. Okay. So this is the chart. Now, listen. See what's going. Let's take this just to make easy for you to understand. Now, this is for everybody who is into investing. Now, I can show you very, very clearly with the Dow Jones. Now, I put this just up and down. As you can see, up and down, all this stuff. This is just small, what we call small trends. Okay, small trends. Now, see, when the stock market reached this area here, I say it was going to be a bull market. But after a few days, we have some news about the interest rate that has been raised by the federal government. That's why a lot of people, they have been selling their stocks. And you see these 2 days when we have the news here and here. These are the news. And understand the market is very, very sensible to big things. Because if the interest rate is going up, a lot of people will stop buying stocks and go to buy bonds and other stuff. Now, it's going down, going up, going down, going up, going down, going up again. So we are still in the correction. Duna, I understand where you are. You are buying ETFs. So all your ETFs, put them into this chart, like the DY chart, and I will show you how to do it from the setting. For example, let's say this is, let's say we take Facebook, for example. Okay, just I will give you an example how to compare your stock with, see, Facebook, for example. It's still losing. It's still losing. Okay, still losing a lot of money, Facebook. Now, you get to the setting and you do comparison. You click comparison. Now, you want to do Dow Jones. Here, Dow Jones. Okay? and you click OK. Now, what does it mean? Look at this chart. Facebook was doing better than the Dow Jones here in 25 July. In 26 July, after the gap down, Facebook is going down. You see that. You see that very, very clearly. Now, where is the Dow Jones? Dow Jones is still in its place. It doesn't change that much. Now, why is that? I always told you that a stock has more risk and more profits than an index. Okay? So you see now, because Dow Jones has 30 stocks, some go up, some go down. That's why you see that it is the average. Facebook is going down. Okay? So you, for example, you put your ETF here, and then you go to the setting, and then you go to comparison. You can change it for SPY, for example, or you change it for the 100. The 100, which is I think 100 stock for Nasdaq, I guess. So you see all these lines. You can change the line. For example, Dow Jones, you do brown like this. So you see. So when you see the color, you see that all these major indexes are above Facebook. Okay? So what does it mean? It means that if you own the index, which is the ETF, you are better than Facebook. And if you are not buying Facebook, you have done good. Because if you have bought Facebook and you stay, now it's 139.53. 139, and before it was 218. So you see how much. Now you can take, for example, Apple. Just an example to show you. Okay? Now, if you see Apple is doing better, excellent than Dow Jones. But the problem is that now it is on the same scale. It is on the same position. It means as if all this trend here, it had been lost. So if you are here, you have been making money, but if you are here, you have been losing money. But now you are, because Apple is one of the stocks of what we call Dow Jones, so you are in the same thing. Okay, you are in the same thing. If Apple goes more and more up, okay, more and more up, it means that it will do better than the thing. Okay, so I will take those comparisons. You can do, guys, you can do for all the stocks, you can do the same if you want to. So in order to speak to Duna, okay, so Duna, you should always use my criteria as you know it very well, and understand that we are still in the correction. We don't know where the stock market will go. This is for sure. Don't let anyone fool you about the market. The market is what you see it. But stocks are not. That's why today I speak about IPOs. Some IPOs or few IPOs can double its money, double the price or triple the price in few days. This is because of the bubble sometimes that happen in IPOs and in small stocks like penny stocks. Because penny stocks are not governed by the mood of the market. Because there are some thousands of people, they buy this, they can move the stock to higher prices. without having mutual fund or big mutual funds. You can have very small mutual funds, but it's not big mutual fund that they buy companies. Those they buy companies that well established. It makes a lot of money. At least it will be like what we call Russell 2000. It means bigger stocks or bigger companies. Okay. So hope you understand this thing, Duna. If you have some issues, Duna, you can send me an email and I will explain more. It's free trade indecision for next week. It's always. Then we see Gabby Lynch. How are you, Gabby Lynch? Thank you very much for coming. It's always on Friday at 10 o'clock. I don't know about next week because we have Thanksgiving. I don't know if we do it or not, so we will see when it comes. Duna says, look at XLK. XLK. Let's it's technology. Now let's do the same. Let's do the same. Okay. Let's change the color. Let's put it yellow. Okay. So. Okay. Now look here. Dow Jones is doing better than this ETF. What does it mean? It means technology ETF. This is the sector. Okay, you are here. You are, if you have this, it is a sector. It is not an industry. So all the stocks of technology, you have them here. That's why, like, and most of these stocks are doing worse than Dow Jones. So Dow Jones is doing better than this ETF. And understand this is a sector ETF, not an industry. Because in this sector, you can find many industries and you can compare with them. You can compare with Dow Jones. Okay? This is just a general thing. Now, if you take, let's say, the others, a blue, let's say, brown, let's say we take all this stuff. You are with the blue. What is this blue? The QQQ. You are the same. So I think it's the Invesco Series 1. Okay? So as you can see, Dow Jones is better. S&P 500, this QQ, you are the same as this QQ thing. Okay? So, it's not that good according to the market. Because if you buy, for example, maybe Dow Jones, you will be better than your ETFs. So ETFs, in order to buy them, they should be better than the Dow Jones. So this is just general. Okay. Now we should take this. So Duna, if you have more questions, please send me an email and we can discuss this in private, because I will not discuss more these things, okay? Because it's inside things that we study, that we train, and that we see. Now, Hobby Bonseigneur said, if you sell before the stock goes low, that's good. What do you mean you sell before the stock goes low? It means it is going up, you sell? And how do you know that it will go down? If it didn't go down, how do you know? You see the future? Okay, that's good. Now, Clown Twitter account said, insiders are crushing Facebook stock because the crushing too much and the bad PR. I don't know what does it mean, this PR. You understand that if, for example, Facebook has a lot of mutual funds and they get scared of the market how it is now, they begin to take their money from Facebook and from some stocks and put them into other stocks that are more stable than Facebook. It could happen like this, but understand, things happen, but you will never know. Let's say the whole market is in a bull market. Maybe all these stocks go up and then do better, like Apple, Facebook, and the other stuff. But right now, they are doing bad. Okay? According to where they were doing bad. It means if you see the percentage, how these stocks go down. That's why I told you before, when I explained the difference between an index or ETF and between a stock. I say a stock can be better. I will just show you more because I have explained this. I can explain it very well here again and again, just for those guys who are here. Okay? So now let's say this is Dow Jones like this. It's going into a zigzag. Now, this is Dow Jones. This is the index. Understand the index. The index is heavy. It means it gives you only the average of 30 stocks in Dow Jones. We have 30 stocks. Okay? 30 stocks. The biggest companies in USA, which are called blue chips. Okay? Blue chips, the big companies. Now this is the trend and how it's doing zigzag. Now you can find a stock that it is doing like this and it's going up. This is stock A. So this stock A is doing excellent. It is here now. It is not the same as Dow Jones. Now you can find a stock, let's say, a stock that it is doing the same as Dow Jones, like this. Okay? So it's the same. So this is stock B. Now you can find a stock that was doing good and then it goes bad. Like we take Facebook. This is an example of Facebook. It was doing better than the market, but it's going down, going down, going down. So it is not doing the average. It's doing bad. It's a downtrend. But in the market, you can find a downtrend, you can find an uptrend, and you can find stocks that are doing the same as Dow Jones. So now, most of the stocks, let's say, 55, or let's say 50% of the stocks are doing like Dow Jones. And you find, for example, 5% of the stocks in the market are doing good, and you find 45 are down. Okay? So this percentage, I just give you this percentage in general. It doesn't mean it's correct. But if you see that almost all stocks are in a downtrend, it means they belong to this. It means there are a lot. And some stocks are they are just doing the average, and some are good, but they are just few that are doing good in the market. Few. Okay? So this is how I see the market. Now let's continue with the Clown with Twitter account. He said, let's see here. He said insiders are crushing Facebook stock because they're crushing too much and the bad PR. I don't know what's the word PR or the abbreviation. So let's go to another. Mason put, he said, how long is Facebook solvent? Stock is go down fast. Yes, because it is one of the stocks that a lot of people are watching. So it can go up very quick and it can go down very quick because we have a lot of traders. Either they go long or they sell short. So if the stock collapses, it will collapse very, very quick because we have hedge funds, we have a lot of millions of people who are doing selling short. When they see Facebook is going down, they do it and they make money. As Facebook was going up and the people make money. So it's the same thing. Twitter with Twitter account said Apple is going back to 90. They won't disclose the number unit sold. Now, what is this Clown with Twitter account? What is this unit sold? And you say it goes to 90. Listen, for me, I don't give numbers about the futures. I don't know. So I describe what I see and what could be the future. But I can't say Facebook or Apple or another stock will go to that price, yes or no. So I don't know. Cloud Twitter account, where do you get your information? So the information, you get it online because all is numbers. Okay? And because I see a lot of stocks, I see where the market is going. So if the whole market is going red for many weeks, many months, you will understand that these stocks, whenever you see the chart, you understand without anyone telling you. Like the General Electric, when it is kicked out of the Dow Jones in July 26. You see that? It was kicked after 110 years. Who can think that an old company like it was kicked out of the Dow Jones and it was replaced with another stock? Okay, so understand that things can happen. Companies, they can lose money. Mutual fund, they can sell their shares for true, and the stock will go down, and you will have even the company can go private again if it can't be in the stock market. But understand that when it goes to again to a private, it's another thing. Okay. Now, Pini Kamis, he said, hi Karim, thanks for the explanation with the chart. Thank you very much. I'm trying just always to make all the information I get into the chart. I will show you the chart and I will show you diagram in order to explain to you easily or simply how things work. And you can try to see the whole market, the whole stocks, what they are doing, using my same techniques that I use. Okay? It gives you just the general thing, what's going on. Okay? For the whole market and for stocks. Let's see another thing. Clown Twitter account. Would you short Facebook? Yes. Any stock. Okay? Any stock, it goes down, you short it. You should never love a stock. Okay? You should see how to get money from the stock. So if there are two ways, you're going up and going down, so it's better to use the both ways for any stock. Entrepreneur Beast, hello. Thank you for coming. So as I told you before, since we are speaking about, because you see, opportunities when it comes to the market, if you don't seize the opportunity at first, you will never get it. Why? Because the market doesn't wait for anyone. We have a lot. You should at least be specific about one kind of search. Okay? You should find what you are searching for specifically. Don't be general, because when you go general, you will find a lot of stocks and it will be hard for you to buy or to sell short. You should just focus on some stocks. For example, if you are going to deal with IPOs in the future, you should make a portfolio of IPOs. If those IPOs do good, you can just buy and wait. Entrepreneur Beast said NVDA dropped a lot. I don't know. Let's. Yes, there is a gap down today. So almost the stocks were good. Man, it was 292 in just October. Now it is 164. Man, that is too much. And you see, when it goes down so quick. With this is the good charting of stocks. Okay, $10 here. Man, $16 here. $16 in 10 October. $20 in 24 October. So the whole October was a disaster for this NVDA. And now we have a gap down. $37. It happened like Facebook, where it go down. So it go down too much. You see? 200, 205, 164. It's a big gap down. You see where the people are selling. It means it's not just the news, but it was going down for a long time, as you can see. It's so bad. It is so bad. It is so bad. So for those people who get into the good days, they can't make a lot of money as usual, and that is trading. Okay, so no, listen, it is not market weakness. There are some stocks who are going up in and almost are going down. I just explained that. Maybe you are here, maybe you're not. It's like about maybe 50% of the stocks are in the middle. They go up, they go down, they go up, they go down. It means they don't do that much. Okay? And the ones that they go up, you find only mostly some penny stocks, some IPOs, and some stocks that have good news. Okay? Just few. And all the others are going down. Free Trader said, you said the truth. I have five portfolios in my watch list. Every morning I navigate in my portfolios to find stocks to go long or short. It makes easier to trade. Yes, this is the good thing to do always. As Free Trader do, and I have told you this before, you should find companies that are going down, whatever is the company. They are just going down, you put them in a portfolio. If you are a day trader, you can make a lot of money in this from February until now. It's the good time to sell short. I told you many times. I understand those people, they don't do selling short. You can buy puts also. If you see a company is doing bad, just buy some puts and leave them for 1 month or 2 months or 3 months. But understand that options, you buy time also. If you want to stay more and more and more, you are buying time. Okay? So if you are thinking to buy puts, if you see some stocks are doing bad, so you can do that also. It means you try to do your best. And in day trading, especially selling short, the good thing about it is that in the first 10 minutes or half an hour, you will understand if the market is going down for that day. Okay? That is the good thing. With some techniques, whenever you have this, you will be able to sell short and to stay whatever you want. When you see money, profits, you just sell, cover back. You sell half of the shares, and then you continue with the others. If the market is good and it's going down, you will be making more money. Okay, but if things goes against you, you should use a stop loss and you exit as a trade. Okay, so since you are making trade, you should specify your risk before you do a trade. Don't play with stocks a lot when you are doing day trading. You should always have the risk before you trade, and this is what I always speak about in selling short. But understand that in general, those who bought ETFs for the ETFs for sectors, for major indexes, they are always not making that much money and not losing that much money until the market decide. So Entrepreneur B said, let's drink some coffee first. Do you think smart money institutions are selling while retail traders are buying? Now listen, for me, this is my general idea. I am saying this since February 2018. the market has no trend. You buy or you sell, it doesn't matter. There is no trend. You should find stocks. If they are having a trend, you buy them. If there is no trend, you don't buy, because the market doesn't decide yet. We are still in the same correction. We don't get out of it. I think in the end of September, beginning of October, stocks have been going up, and the bull market begin. Then we go again to the correction. Okay, so smart money institutions and retail traders. What do you mean by smart money institutions? You mean you know the ones who change the whole market are mutual funds, because they own 50% or 45% of the whole market. They own it. They can't sell, because if they sell, the market will collapse. Because here in USA we have laws for mutual funds. Okay, these mutual funds cannot sell. I don't know the exact number, but I think it's they can sell only 10 or 20%. They can't sell 100% of their money, because if they sell, who will buy? If they sell, the whole market will collapse, and we will be like in 1929 when we have the big crisis. At that time, there are no rules. It was chaos. That's why the market stays 10 or 15 years in order to get back to its feet, the market. And I have explained that. Many times about Dow Jones. Okay, and you see what did happen. So yes, mutual funds in a bear market, traders must short to buy or buy puts to make profits. Yes. So I don't know for the Dow Jones. I don't know if I can get back to the worst years in the whole market in 1929. So I don't know if I can go back. So let's go and see if I can go back. Okay, let's go back. Yes, you see those? 1, 2, 3, 4. These are the 4 years. It was 386. Okay, and then it goes to 40, I guess. Yes, 386 to 40, and then it was very, very troubled. And then you see the market is going up, until we have what we call the 80s. Here the 80s, where all the retail big companies come, like Walmart, like Target, like Sears, like here all these companies come here, so they make a lot of money until now. This is a troubled year. Okay, So we are making some money according to last year for the Dow Jones, okay? But if it continue, if we end the year like this, so we don't know what will be next year. So we have another question from James Armstrong. What's your favorite coffee? Now, for me, I'm drinking Colombian coffee. This is what I just get for always. But like outside, I like cappuccino or latte or something like that. There is a lot of salt, a lot of stuff they put. I don't know what they put, but it's good. Now, AJGMG said, any relation between gold and oil stocks trends seems to me in 70% of cases they move in the same direction. What you think? Now listen, oil stocks sector, it was being hit while the market is going. This is an exception these years. So it doesn't mean that always we have an exception. No, it's just these years when we have oil stocks which were going down so bad. The barrel of oil was $150. Then it goes to, I think, to $40 or $45. That's why here in America, we are good, because the oil, or the, what do you say, oil, the gas, when you are buying gas, it is cheaper than many years ago. So for us, it's very good here. But for stock market, the oil ETFs and stocks were doing so bad. Now gold is going, I think is going bad like the stocks, and you should always try to see the indexes in order to understand. So let's give you the comparison between gold and silver and Dow Jones. Let's go there and check, just in the sake of checking. Okay, so let's go. Now let's go to gold. This is the ETF. Oh, no. This is the ETF, gold. Okay? Now, we compare gold with Dow Jones. We go to the setting, comparison, Dow Jones. Okay? Now look here. Dow Jones, if you buy Dow Jones, it's better than gold ETF. Okay? So gold is doing bad or worse than Dow Jones. So you understand? Okay, they begin here at the same time. See? Here, this is the start. In 20 September 2017, the stock market has been doing so good, it means compared to gold. And gold, you see, it's not doing that much, and then it collapses. So gold collapse, stock market go up. So stocks are doing better than gold. Now, if you take, for example, silver, it will be worse maybe. Silver is doing worse, as you can see. Okay, this is here the beginning. 25 April, stock market was going up, 2017. Silver was going down and down and down and down. It's 13.53 right now. Okay, so it is so bad. So this is just an example of how you can let's see oil crude oil, okay, see the crude oil is going down while it was doing good, better than the stock market, but now it's all going down and it's the same. Okay, so it was doing good here in this ETF, iPath Series B S&P 500 GSCI crude oil ETF. Okay, so always try to compare ETFs with the Dow Jones, as I showed you here. You go to the setting, comparison, and you put the Dow Jones. Now, if you want to do SPY, which is a S&P 500, you can do that. Okay, you can do that, and you can change the color as you like. Or you can put another stock here, and you can let's say you want to do gold. Okay, so gold was doing too bad here, and the oil was doing good. This is just what to do in order to know, just to know. So as I told you, 70%, you say 70% of cases they move in the same direction. As I showed you, they don't. And I showed you now the chart. You can, but understand, when we say ETF, it means it depends on the index. How many stocks are there? So from an index to index, even when you say oil ETF, it means there are many. There is no only one, because each ETF it's just a collection of stocks on the same industries, like oil, gas, and the other stuff. Okay? Penny Kamis said, why does the price gap serve as support or resistance? Others say that the gap will usually be filled. Oh, okay. Now, so I think I have answered this question before, but I will try. I will try to give you something. Okay, so now let's go to the explanation. I just explain you to this. So since you are speaking about price gap serve as a support or resistance, so I will just whatever. Okay, I will just give you an example. Okay, so let's say the stock was going up. This is the last candlestick. It was going up, and then this is a candlestick, a gap down. Okay, a gap down. Now, so this candlestick, the stock, when it opens, people will look where things go. Okay? Now I'll give you an example. Because each time it is different. That's why when you are a day trader and you want to take advantage of a gap down, you should understand that each time things change. Okay? Now let's say that this is the open. The open, it means 9:30. Okay, 9:30 a.m. You will see that there is a gap down, but after that, the stock goes up. Let's say it goes up $2. And then after going up, let's say the stock is $50 here. It was 55 here. And we just make a $5 gap down. And this is a gap down. A gap down. Now, the stock opens at 50, 9:30. It goes up to $52. Okay, it goes to $52. And then it goes here down to the low of the day, which is, let's say, $46. This is the low. And then here is the close at 4. And it is $48. Okay? Now, this is a scenario where you, as a day trader, you can take profit. You can just take advantage of the gap down, and then you see if there is a filling to the gap. This is what you are speaking about, is this. Filling the gap. This is the gap down, you fill it. This is what some people are talking about here. This one. This is called filling the gap. Okay? Now, this is for what we call filling the gap when there is a gap down. Now, how the filling the gap goes with a gap up. This is a gap down. So let's change now to a gap down. A gap up, sorry. Now let's say the stock was going down, and this is the last day. It was too bad for this stock, but because of the good news, we have, okay, we have a candlestick like this. Let's say it is a, we put it too long, okay? Now, sometimes it happens like this. So here is the open. Let's say the open, it is, the stock was $50. Now here, yesterday, it was $45. So we have $5 gap up. So this is a gap up, okay? But the stock goes little bit up, and then it continues to go down until here. Let's say 47, and then it closes at 46. This is the close. Now all these from here, this from 50 to 47, this $3 is to fill the gap, or what we call filling the gap. But it's not always correct. It's not always correct. Sometimes, I will give you another thing, okay? With the same example. With the same example, okay, with the same example, okay, with the same example, So now here it opens, open at $50. It goes little down to 49, little down. It means it filled the gap little down, and then the stock goes to, like this, to $60 at the close. So in this situation, the stock has filled the gap, but little bit. Let's say it is only $1 filling the gap. But because the news was so good that from the beginning the stock has been going up more and more. It means the price increases from 50 to 60. This happens in some stocks. Most of the time when the news are so good. Okay? So try not to stick to one example, because it will never gonna happen. Because if there is only one thing, the stock, if there is a gap up, it goes $1 down and then it goes $10 up. If it happens like this, it will be so easy, and any stupid person can make the money if he knows this. And this is what we call pattern. And some stupid people use pattern, but they can't succeed with pattern because stocks do hundreds of thousands of patterns. They don't do one pattern. Okay? This is just to make sure you understand, and hope I answered your question for Penny Camus for this question, and understand that if you are interested in this, you should go and check, for example, training level 11 and 12 about day trading and about shorting. At least you understand those techniques and you understand what to do in these situations. But understand that always think that not always the stock will do the same. It always changes. Why? It's just because of the reaction of the traders. You will never know what they do. Sometimes when it is a bad market, like you see Facebook or Twitter, it goes up, there is a gap up, but later it's going down after a few days. It means it's, I think I will show you, I think I will show you Twitter. I think last time Twitter, yes. Now, if you take Twitter, let's see what it did. So it opens 31, 35, it goes to 30, and then it goes to 33, 33, and then it goes to 31. Okay? So it opens 31, 35, and then it goes to 33.67. It means it was going up, but it stops and then it go down, and it's just because the days were so bad. It means if the market is always down and the people, they get scared, so they sell. Okay? So we'll take this. Okay? So it means don't get stuck in one pattern that you see. You say to yourself, oh, where there is a gap up, the stock will go down because it is what we call filling the gap. It happens sometimes, but sometimes it doesn't happen. So for you, don't take rules that if there is this thing, there should be this thing. It doesn't exist. That's why in day trading, you should practice a lot and expect everything. Expect everything. Sometimes you have a gap up, but at the end of the day, all what is gap up will be gap down. Okay? It depends on what's going on with the trader, what they do. Okay? So this is in general Penny Camus about what's going on, about support or resistance. Support line and resistance line, it is just a virtual line that you can put at any price, depending on what you are looking for. So there is no, when we say resistance line or support line, it doesn't mean for me, it doesn't mean for someone else the same thing. No, it depends what you are doing and what you are showing. Okay? Clown with Twitter account said, do mutual fund managers consider Wall Street analysis? Yes, they might, for upgrades, for their opinion maybe on the company. Yes, but understand that mutual funds are managers and they can hire some professional people to look to the companies before they buy. They can't do that because they have too much money. How do you think a manager manages $100 billion or $1,000 billion in his hands? He can't do all by himself. So he will ask information, and this information you pay for it. Okay? Let's say a company is going to bankrupt. A mutual fund will not go and buy this company, and then he gets stuck, and then if the company go bankrupt, he loses the money. Understand that mutual fund is putting 500, 1 billion, 2 billion. I don't know how much money he will put into the stock. So it is too much money. So it's not a game to buy today and to sell tomorrow. No, he will buy in many days or many weeks, and he will sell in many days or many weeks. So it is a big thing, and he has no choice, because when you buy today, you can sell tomorrow. It's not a day trade. Okay, so understand that there are some. But for me, I am not a mutual fund, so I can't give you that much information. Okay, you should do the series. And then you get to go to work with a corporation or with a broker in order to be a mutual fund and so on. Okay, so I don't work like that way. AJGMG, should we prepare for the market crash? If yes, how? No, man, you don't prepare anything. Why you should prepare? What's the thing that you should do? Each week, I explain the same thing. I will explain it to you again and again. Okay? I will explain with the chart, and I will explain. Okay? So, preparation. What do you mean by preparation? It means what you should do in order to prepare. You should do nothing, because the chart shows you everything. So I will just give you an example about Dow Jones. Okay? Yes, let's take the Dow Jones like an ETF. Listen, look at this. Here is the correction. This is the resistance line. This is the support line. The correction happens here beginning from 29 January 2018 with the red candlestick. It goes down to 9 February. This is the correction length, the correction width. It means in a few days the stock market collapse. Now, the stock market is going up and down, up and down, up and down, up and down. So we are still in the correction. Now, how do you think it will gonna change? If the stock market goes and crosses the resistance line, goes up, we are in a bull market. If it continues to go up, so we will be in a bull market. Everything, almost all the stocks will go up. Now the opposite happen if the stock market collapse and hit the support line here. Now if it hit the support line, what does it mean? We will be here in the bear market. It means most of the stocks will go down into a bear market. This is so simple. Now you ask me what you should do. Nothing. You should do nothing. Just follow the market where it goes. Okay? So some stocks are quicker to go up before the Dow Jones go. You find that some stocks go up before the Dow Jones because Dow Jones is heavy. You get just the average here. Maybe some stocks are here. Now, if they go up, the Dow Jones will go up and then we'll have bull market. But no one will decide for you now. You tell me, for example, what do you think of 2019? Is it a bull or a bear? I don't know. And no one knows. Some people, they just predict like this because you have no idea what will be the market in the future. So it's up to the market and the big guys who will change all that. So it is not good to predict. And this is the oh, you are speaking about here. You say I meant cash out stocks and invest in other sectors as investor, not trader. Yes, you can do that but the problem is that when you use sectors and industries, you should compare them with Dow Jones or S&P 500 and you see where they are going. I just a few minutes ago I just show you how. Okay, you should compare them with Dow Jones. I will show you the chart just to give you an idea. Let's say we compare Dow Jones, we compare it with S&P 500. What you should do, you go here to the setting, you click that, comparison, S&P 500. Let's say we put it with yellow, it's better, just to see it very well. Now, look at this. Dow Jones, okay, is doing now better than S&P 500. Okay, so you see that S&P 500 is down and Dow Jones is up. Let me see here. Yes. Okay, so you see that Dow Jones is doing better than S&P 500. What does it mean for you? It means if you have both Dow Jones and S&P 500, now you are making more money. Okay, here it said 7.5% here, but here we are at 11% for the year. This is the beginning of the year, for example, here, beginning of the year, and you are 11%. It means you are making money if you bought it before, like in December, or you bought it in November last year. So you are up 11%. Okay? Now, if you bought S&P 500, you are only 7% 50. Just an approximate, okay? So this is how you want to just check where you are. But how many industries and sectors? We have hundreds. So you should go and search by yourself and make a portfolio and do your job. So no one is going AJ, GMG. No one is going to do the work for you, because you will have to do it by yourself. Now, for us, as the people who are subscribed to my golden subscription or to my silver subscription, I give them some ETFs and I will show them what's going on to the market. Some people can try to follow as me, and if there is a buy, they can buy. Okay? This is just to be knowing what's going on inside. Okay? So I give some more information about ETFs, about stocks, about search, and I will show things. So this is what I mean by ETFs. And understand, sector ETFs, they are a lot. Industries ETFs, they are a lot. You will find a lot, because if you want to know the ETFs, I will show you for all you guys who want to just to see the ETFs. I will just show you. So you go to the chart and you go to this blue line here, and you go under it, and you find all the menu. So you find the 2, 4, 6, 7, 8. So here number 8, it says exchange traded funds. So don't go to ETFs here. No, you should go from the main here. Now when you click exchange traded funds, you click that, you will find hundreds. All these are ETFs. All these. It's a lot. Hundreds and hundreds and hundreds of ETFs you can see. Some maybe you know, others you don't know. Okay? So you click and you try to see from the setting when you compare with Dow Jones. Because when you compare with Dow Jones or you compare with S&P 500, it gives you what's this ETF is doing. Okay? Each ETF is different from the other, because each ETF, you should never buy an ETF until you see what is it tracks. Whenever you find an ETF, for example, those ETFs, you want, for example, to buy this ETF, you should see what it tracks. It means it tracks what? What is the index it tracks? Here it says Invesco currency shares Euro Trust. It means it's dealing with forex, currency pairs. So maybe it's not dealing with stocks. So try to be careful. Okay? Try to be careful. Let's say here, Vanguard Value ETF. It means all the stocks are value stocks. Okay? VTV. Just an example, okay? That's how you want to see stuff. So some people, when they get scared, they go to the ETFs or the major indexes, which is a good move. But understand that you will get the average, but try to look at what the market is doing for the following weeks and months. Is it going to be a bull market? You will see that all your ETFs will be going up. But if it is a bear market, almost your ETFs will be going down. Oh, yes. AJGMG said, I can't do day trading since I am working. I need to find something like long-term investment or investment policy. Yes, long investment, you can either choose the stocks, because let's say, I will tell you something, okay? It's just to make sure you understand. You can make your own ETF. Now, how is that? I will just give you an idea. You can do it for the future. Okay? So let's give the explanation. Now, there are two ways. Okay? You can make your portfolio of stocks or ETFs. Now, when you buy an ETF, let's say you buy 5 ETFs. 1, 2, 3, 4, 5. Now, these ETFs that you bought, each ETF is, let's say this has 50 stocks. This has 60. This has 30 stocks. This has 200 stocks. This has 500, like S&P 500. Just to give you S&P 500, it has 500 stocks. For example, 30 stocks. You buy, for example, Dow Jones. This is just an example, okay? You don't need to buy stocks here, because when you buy Dow Jones, you have bought 30 stocks. If you bought 500, S&P 500, it means you have bought 500 stocks at the same time. Now here, if you want to buy stocks by yourself, this will have more profits and more losses. More losses. Now, what does this mean? In the ETFs, you always have the average. But here, for stocks, you can have a high percentage of profits. Let's say you, in these stocks that you bought, after 1 year, you make 100% of your money. Okay? Now, if you go to those stocks that are here, let's say they are here, let's say you make 27%. Now, why is that? Why in stocks you can have 100% profit, and then if you go to these stocks with other stocks, you can have 20, because this is the average. Now, here is another problem. With the stocks, if they go down, you can lose, let's say here, 50%. Now here, you can lose, for example, 35%. It means you don't lose that much as here. Okay? So here, stocks, we have more risks, but more reward, more profits if it is good. That's why Warren Buffett, he chooses the stocks. He doesn't choose ETFs, because ETFs, it gives you just the average. It didn't give you the full thing about the stock. But in order to buy stocks like Warren Buffett, you should buy a lot of stocks. Okay? And leave them forever. If the market is going down or up, just leave them. And if the market is good, they will give you too much money. If the market is bad, they go like this, and just leave them. If you buy stocks with dividend, for example, each each quarter, each 3 months, they give you a dividend, like 2% or 5% more. Okay? So that's the deal. Either you use the stocks or you use ETF. And I showed you that stocks, we have more risk, but we have more reward. If you succeed, you have more reward. If you lose, you lose more, because stocks are dangerous. Okay? If you have some stocks that are bad, it will influence on your percentage. But here, since we have a lot of stocks, so the good ones, the bad ones, you get the average. Okay? So hope so thank you, AJ. You say merci, Karim, for the information. Thank you very much. But it's better. This is just my opinion. You can do whatever you want. But if you want to make sure that the market is good when you begin to invest, you should wait until you see the bull market. It means the stocks go above the resistance line. It means you see the whole market is going up. Let's say at the beginning of in January 2019, everything is going up. So then when you buy ETFs you will get the average and everything will be going good. And 1 year, 2 years, or 3 years, you don't worry at all because everything is going good. But let's say you buy now. We don't know if it is good or bad. Let's say after 1 month or two, all the market go down. You will be losing a lot of money. And if it is a bear market, whatever you go to index, whatever is in ETF, it's the stocks, it's going down. So the market will not give more opportunities than when it is in the bull market. Okay? So this year, the whole year is just trending into a range. It is just correction. Okay? That's the general thing I can say. Wiseman said, Karim, you used to day trading. Now you make more money doing swing trading. Yes. Swing trading is I follow the major mood of the market, so I can find a lot of stocks, especially when there is a sector that it is a bull sector compared to the market. So I go to that and I search stocks that belong to that sector. Before it was drugs. It was doing so good. And then we go to we have gold and silver and all the gold companies. Silver companies, they were doing so good. Then we have oil companies, they were doing so good. So each time the market gives you opportunities in one sector or two or three that are doing better than the market, although the whole market is doing good. But this year, there is no that much trends. It's just because the market is troubled. You can find stocks, yes, but the whole market sectors were not doing that good. They go just for 1 month or two and then they go down. So the market is not doing so good as I expect to be. That's why we spoke about IPOs. We speak about what we call penny stocks. It's just because they don't belong to the market and there are bubbles. A stock that it is $5 in 1 week, 2 weeks, 3 weeks, it goes to $10. So you double your money. But if you go to bigger stocks are going down because of the market. So you see, You should always find bargain, and you should look for other things than going long for swing trading. Sometimes you find good things in shorting stocks. You begin to short stocks whenever you find an opportunity. Okay, but everything needs to be like a wise man said, did you know about swing trading when you start doing day trading? Oh, no. No, because most of the people, when they are beginners, they don't think about investing or going for long. No. All the people, when they get excited, they go to day trading because there is excitement. It means each day you buy, you go long, you sell short. So it's like an excitement that you do always, and then you can make money, which is very good. But sometimes you do a lot of commissions. These commissions kill your profits, and you see yourself that if you don't have a very big account, you will see that you are just feeding your broker. It's like feeding your broker. If you have a small account and you begin to do day trading too much, you just feed your broker, because all your profits that you make, you give it to your broker mostly. So you will be doing nothing. That's why swing trading in good markets will make a lot of money, because when you buy something, it's going up, you just leave it. Okay? And you can make a lot of money without going up and down, up and down, up and down, and without having commissions. Okay? So every style has good things and bad things. But whenever yes, brokers, they like, and they try to punish investors. Like, for example, this interactive brokers, they don't like people who do swing trading or do investing for the long run. They will, if you don't trade for 1 month, they will put like a fee, $10 or $15 or $30. I don't know how much now. It means to punish you, because they don't make money from you. They are telling this directly to you. They don't care. They like more day traders. That's why they don't want investors in their platform. That's why when they see some people, they begin to invest, you see they get charged each month $10 or $30 or $40. Understand that, you see, it's not a big deal, but why you pay for something that you get free elsewhere? So it's not a big deal. Okay? SJGMG, what criteria you look at in a company to select is a healthy one? Now listen, there are a lot of things I see. Most of it is about earnings. Earnings, that it is going up and up and up each year, each quarter. Some, they give dividend, they increase the dividend. And competition. You should see this company compared to the other company in the same industry. Okay? And you should also see the price. Price is so important. If you see an excellent company, they say it's an excellent company, and you are losing 10%, 20%, 30%, don't believe it. Don't believe it. People are living this company and they are selling it. So how can you stay with a company that it is losing too much money? Like General Electric. It is in Dow Jones. Almost Dow Jones stocks go up for 1.5 years in 2017 and in 2016. All the stocks go up except General Electric. If you buy General Electric as investment for the long run, because they told you it has been 110 years in Dow Jones, it was kicked out in July 26 of this year from Dow Jones, so it is no more in Dow Jones. So don't believe what the analysts say. You should see by yourself what's going on, and you can understand better than them because they are paid. They can give you false information. It's not false information, but they can say it's a great company because it is making money. But when you see the prices going down, you understand that there is something wrong, so you should search by yourself. So, and you should just see the price. For example, Sears, Giuseppini, I see them for years going down. But I was trading these stocks before and they were so good. I was trading them like swing trading. They were doing so good. Sears, I was doing day trade. Each day, they go $3, $4 a day. It was so great, this Sears. But now, I don't know, it's $1 or it's, I don't know if it's still in the market. Let's see the chart because I didn't see. Oh, I think. Oh, it's 40 cents. It's 40 cents. I will show you how this stock was before. It was $195 in 2007. I think, let's see here. Yes, I think I traded in these 2 years. In these 2 years, here and here. 2012 and 13. These 2 years I have traded. Now this, before here, I was not trading. 2006 to the, no. Okay, so 2012 and 13, I was trading this. But see, now the other one, which is, what is it? Giuseppini. Now it is $1.29. Let's see here. Yes, I was trading these years. Let's see here. Yes. So as you can see, these companies, they were doing good, but now they are not. So maybe they go bankrupt or they will be bought. I have no idea what will happen to them. But understand that I will have another question. Is these rules applied to penny stocks companies? No, 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 no way. No way. Almost penny stocks, there are only few that succeed because they are very big companies and they are known. Most of the penny stocks, they collapse. Most of them. I'm telling you. So, if you want to invest, don't invest in penny stocks. Okay? Go to penny stocks from my chart and try to find stocks. If you go to search for good ones, it's rare to find a good one. It's rare. So penny stocks are manipulated because most of penny stocks, they are not bought by mutual funds, except when they go higher and higher in price. 5, 7, 10, 20, 30, 40, and then at that time, they become good prices to buy because at that time, mutual funds, they buy them because these companies show that they are good. But if it is $1, $2, $3, you will never know. They are manipulated, so they go up a little bit, they go down, and then you lose a lot of money. Okay? I can show you these right now in a few, and then we can stop because. So let's go to drug companies. These are the most when you find, and we go down. So see this companies by year, okay? See, this, it was $21. Now it is 3 cents. See, $21. And then now 3 cents. Second one. See, this stock was 228. it goes, yes, good for three or 4 years, and then it collapsed, and now it is 22 cents. So if you are, let's say you are good with this, it begins with $19. It goes to $84, 228, and then it collapses. So this stock was $3,000, and now it's 29 cents. Listen. It is $3,000. This, why we have this? This is the years 2000, when we have the .com. That's why all the stocks go up so crazy. Another stock, it was $3. Now it is 32 cents. It was $1.45. Okay? Another one. 33 cents. $0.34. 36 cents. 45 cents. You see? But the first year they go from, it opens at 20, it goes to 48. Okay? So I don't, for me, it's out of a question. Yes. So you should follow these companies and know what they do, and understand that the news, things then come to companies and they change. Okay? Now, if you want to, you can go to Warren Buffett and you just take some good stocks from him, and then you make a portfolio, and then that's it. you copy him, and that's it. But understand that he knows the companies better, and he has a lot of money to buy, and he lives from dividend because he has a lot of money. Not any person is like Warren Buffett, to buy too much and to live from dividend. No, not everyone. Okay, so it's 2 hours 13 minutes, and I think it's time to close this live chat and live session. Tomorrow I don't know if I make another live session on next Friday. We have the Thanksgiving, and I give a lot of discounts beginning from today. Thank you thank you very much, and I will see if I am available on next Friday. I will announce it, so you can come at 10 and we'll see. If I don't announce, it means I'm not going to come. And since it is Thanksgiving, so happy Thanksgiving. I make some discounts for the training. So if you are going to, if you are interested, you can check my website, or you can just send me an email, as always. Okay? So here is my email for those, my website, and my email for those who don't know the email. Okay. So thank you very much. And if I come next Friday, if God wills, if we're still alive, so we will continue our live. If not, we will have it the other week, and I will make mini videos. So always you can watch videos. You can watch more information. And if you need me, or if you want to discuss something with me, you just send me an email. And for the subscribers that I have, I always continue giving information about the market, about the ETFs, about the stocks, and that's it. Okay. So thank you very much for staying. And if you have any question, please ask, and check the discounts that I give in the website when you go, and just check. And thank you very much. See you next time.